All right, now we're recording. So we're live. iTrade alert. I'm Mr. Wall Street, and I am going to be going over the rules of the road, rules of engagement. It's very important that we understand that these are just terms that we use internally, but you can also use them externally as you're looking at the market and trading and doing your analysis. So here's our disclaimer. Take a second. Let it dive in. All right, now, and we go. So, what is a boulevard? Okay. What is a boulevard? Oh, hold on a second. My bad. Back up. So, a boulevard is just these different avenues that we find on a higher time frame, right? Okay. We identify it by using our mapping process. But the only thing that a boulevard is our streets that we find on our higher time frame. That could be our higher time frame being the weekly if we're swing trading, or it could be the higher time frame being the daily. Okay. And I could have sworn that I had some of these on here. Hold on one second. Should be an animation. Should be an animation there. All right, let's do this again. All right. You see that there? Okay. So give me a 7 if you follow me. Okay. All this is identifying our higher time frame streets. If we're a day trader and we're trading on a, let's say a 15-minute, okay, that may be our 4-hour, okay, or maybe even going down to your hourly. Now, as a short-term swing trader who's trading on an hourly time frame for your entries, you may be going to your daily to identify your boulevards, okay? For those that are your traditional swing traders, you're going to your weekly time frame, okay, to identify your boulevards. So all the boulevard is the higher time frame street. We all good? Give me a 1 if you follow me. I want to make sure we do this before we move on, okay? So next, the map, okay? The map. What is the map? The map is the area between the North Boulevard and South Boulevard. From there, we can determine where we are on the map, okay? You guys take a look here. You see this? This is our map. So when we go in and we identify where our higher time frame streets are, we can then use the Fibonacci tool, the Fib tool, right? And have it go all the way down. Now, we also identify this as the Fib block, okay? But for some of you guys, because I got a lot of questions on what is Fib block, and some of you think it's an indicator, you get confused. So we can interchange it with the map. It's just our overall big picture area where we are playing. Give me a Y if you follow me. Now, I'm not showing you how to draw the map or identify the map or identify the boulevards in this call. The only thing I'm trying to do is make sure those that are new are following along with this terminology, all right? This is the rules of the road. Now, I'm going to drop this in the chat, and I'm going to have this session posted often so that new traders are able to catch on quickly, all right? Because some of you guys aren't watching all these videos. So it's very, very important. So again, once you identify north side and then you identify south side, you can see where you are on the map. If you want to go long, where you typically want to be? You want to be at the bottom of the map, okay? And if I'm shorting, I want to be at the top of the map, right? So when we talk about south side, north side, you all know what we're talking about now, right? Give me a 1 if you follow me. Okay, good. Hold on one second. All right, now moving on. After that, it's your job to determine the location of current price. The location of current price on the map, based on your multiple time frame analysis, will then help you to know what to do on the lower time frame to decipher if the trade's a go, right, a slow, or a stop. Now, moving on to streets. Okay, on the left, we have a block. On the right, we have an avenue. Now, we have different types of streets. We have continuation Ave, we have reversal Ave. We have continuation street, we have reversal street. I'm not going to talk about the different things that qualify them to be good, okay? I'm mainly going to talk about what they are, okay? Does that make sense? So you know what we're talking about. You follow me? So, going in and looking, you could see here, this is the street, okay? This is the street. Both avenues and blocks are streets. So when we say GPS, GPS means general position of street. Mapping means going to find the street. Give me a 7 if you follow me. Big Gucci, this is Pip Talk. This is not a mastermind session, but I'm making sure that everybody that's following me, whether it's a free trade or a mastermind trade, you're able to catch it. Now, you definitely want to follow along even if you're mastermind, because most of these signals and most of the things that we're giving out are mastermind based, right? So, does everybody follow me again when I say street? Okay? Anybody unclear? Give me a 2 if you don't follow me, or even a 6. Let's say a 6. Right? Give me a 6 if you're not following me. Keys, just come see me. You don't tune in enough. You got to tune in a little more. All right, so these are based on the levels that we call out, okay? Sometimes they're intersection levels. Sometimes they're U-turn zones. But at the end of the day, they're all streets, okay? When I say street, I mean the distance between entry curve, exit curve. Now, I want to talk about that for a second here. When we're talking about a block, your entry curve is your green line. Your exit curve is your red line, okay? And your entry curve will always be above your red line. When I'm talking about an avenue, your entry curve is your green line, your exit curve is your red line, and your entry curve will always be below your exit curve. Give me a 1 if you follow me. Okay? Now, give me a second here. Now, hold on 1 second. Now, signal notification. Okay? Signal notification. Looking at the signals as they come out. I call out signals mainly on Telegram. I want to make sure that we're clear about this because I have a lot of people that are confused. I typically send out roughly 50 plus signals, right, per week in the Telegram chat. But I typically send out only 5, okay, through SMS. Understand that the levels that are called out as intersection levels can't be sent out through SMS because they're image-based. But here's what I want to do. I want to make an announcement, okay? I want to make sure that everybody's listening and everybody's tuned in. Moving forward, I am going to start giving trade updates on intersection levels. So please, please, please do not text me, message me, or go in the chat and say, when was that signal sent out? I didn't get that alert. Give me a 7 if you follow me. I don't want you guys saying, hey, that alert wasn't sent out, I didn't get it, et cetera, because I know that a lot of you are going to be going through this. For those of you that are not on the call, you're going to be sitting back and you're going to be like, well, I didn't get that signal. I have a new signal chat, okay, a new channel, a new signal channel that is exclusively for signals. Type a Y if you're in it and N if you're not. I am not going to post the link. You've got to get the link inside the iTrade alert chat. But you will notice it, okay? You will notice it by the guy, okay? Terry, are you subscribed, Terry? Ito, are you subscribed? And Darrell, are you subscribed? I know you are subscribed, Flash. So Flash, go into the chat, and I'm going to go ahead and pin it right now, okay? Give me a second here. I'm going to pin it right now. I just got to go in, subscribers, invite, copy link. Hold on. Give me 1 second. Dropped it, pinning it, pinned it. All right. Now, for those of you that have not gotten access, go ahead and click on the pin. Okay. Take a look. Terry, take a look. Okay. Now, how do you subscribe? He told, let me give you the link to subscribe. Okay. Give me 1 second here. I'll drop it in the chat now. Okay. There you go. All right. Now, for those of you that want to get access to our official Pip Talk chat, just give me a second here, copying the link. Give me 1 second here. All right. You just jump in that chat. You can actually get access to a lot of the different things that we offer. We also have another chat here. Let me give you the channel, official Pip Talk chat. We also have a bot. I'm going to talk about the bot, show you guys how to use the bot as well. Okay. Just give me a second. Just want to catch everybody up. Excellent. All right, there goes the links. Now, I don't know if Elijah and Deja are in the chat as well, but please make sure that you're dropping the links for those that are there. All right, now, I've made the exclusive chat so that it's easy for you guys to go in and find the trades. Now, we have intersection levels, okay? Intersection levels are based on price coming to the level, right? And then just turning at the level. Now, the difference between intersection and U-turn is how you approach the trade. So if you want to take a trade based on an intersection level and you want to treat it like an intersection level, you would take a sell limit order in this scenario. If we're long, it'd be a buy limit. But that's the only difference between the intersection and the U-turn. Now, I will give it to you based on U-turn if it's inside the level. Give you an example. This is U-turn. U-turn is waiting for price to come inside the level. Our alerts have triggered. We know it's inside the street. When it's in the middle of the street, I've been calling out the trade so that we can take the opportunity at the desired time. Okay? That's U-turn. Now, let me back up a second. Okay? Let me talk about these. All right? Hold on a second. These are basically going to be levels that are called out. And when I call them out in the beginning of the week, we have to understand that we have to gauge the market sentiment. Okay? There are weeks when intersection levels will hit and U-turn levels don't get activated. There are weeks when your intersection levels may not work as well and price goes all the way deep inside your zone. Now, how will we know and how can we gauge when it should be an intersection week versus a U-turn week, or a U-turn week versus an intersection week? Because the market really moves like that. One of the biggest things that you can use to gauge is going to be the news that's coming out for the week. Give me a 7 if you follow me. What news do we have that came out this week? Okay. What news do you notice that has been out this week and was out for like 3 days running? G7, right, Shy? G7. So those were affecting all currencies, and it ran all day for 3 days. So for professionals that are trading institutions and institutional money, funds of funds, endowment funds, and hedge funds, they're typically sitting on the sidelines flat. Algorithms are sitting on the sidelines flat unless they're scalping in between bid-ask spread. So when we've got volatility like this, you got to be a little careful and understand that the market's going to be a little more quiet in terms of its action, and you get big moves based off the news. So what you do, what you typically want to do, is you want to gauge these weeks with news coming ahead and shift from putting limit orders and taking intersection levels to taking the intersection levels as U-turn zones. Give me a 1 if you follow me. It's very important that you make that shift. It's you, the trader, that makes the adjustment. The only thing that determines that adjustment, okay, only thing that determines that adjustment is the sentiment of the market. What I'm talking about right now is sentiment, okay? A good example is if the U.S. equities market's moving very violently, the dollar's got a lot of momentum in either direction, and you see big straightaway candles, because I'm going to talk about the traffic jam candles that form our levels, but the explosive moves, right? Then typically these kind of candlesticks go straight through our levels. So what you want to do is you may want to shift to waiting for the turn, okay? You want to shift to waiting for the turn. You can only gauge that on Sunday and Monday. Okay, now give me a 7 if you follow that, right? You can only gauge that coming into the week, engaging it, seeing it, feeling it, knowing how the market's moving and reacting accordingly. Okay? I'm going to say it again. As you're looking at the market and you see big moves, you guys ever seen those big candlesticks that come into your levels? And I tell you, we don't want it. We want to back away. We want to maybe wait for the turn. We saw it on Euro US dollar the other day. We see it a lot often on gold and Bitcoin, right? We see that a lot. So understand, when we're looking at the sentiment of the market, or we can see news coming in that's going to change the sentiment, then this is where you're shifting from taking limit orders to stop market orders. A stop market order is a buy stop market, a sell stop market, okay? A limit order is a buy limit order, a sell limit order. Now give me a 1 if you follow me. Intersection levels are taken with limit orders, limit entries. U-turn zones are taken with stop market orders. Okay? Now you get that? Okay, good, good. Yes, that's right, that's right. So there are times when you don't want to be taking those limit orders to enter because the market's moving too volatilely. And the alerts that we set can definitely help us to be able to protect us if it's coming in too strong to our street. Now, intersection level, we take it there with a limit order, a limit entry, and we're rewarded. If you're waiting for the U-turn, you don't get it. For U-turn zones, price comes in, our alert triggers, and we wait for the turn. We wait for our setups, okay? We enter once price stays in the street. And if it turns, we're good. If it doesn't, we talk about the rules for that inside our mastermind sessions, okay? Now, let's talk about traffic jams, okay? You know traffic jams as support and resistance. A cluster of candles is a traffic jam, and it creates support and resistance. We don't like traffic jam candles when we're trying to enter the market, okay? We can use these traffic jam candles to help us with our targets, but we don't really like them otherwise. Now, I'm not going to go too deep into the specifics, but just know that this is support and resistance. So when we talk about traffic jams, all we're talking about is our normal, typical support and resistance, okay? And how and where it forms. Give me a Y if you follow me. Okay? How and where it forms. So what's the traffic jam candle? Their body is less than equal than half of their range. It's typically a doji, okay? This is what they look like. You also have your narrow range candles, where their body's more than half their range, but they're still narrow, okay? These traffic jam candles are wonderful when price comes in the street to meet again in the street, and they stay narrow. And then it leaves the street with an explosive move, okay? But I don't want them to form in the open road. Here are your common traffic jam candles. I'm not going to talk about how we trade them and where we like to see them, but I will show you where we don't like to see them today, okay? Now, in this session today, I'm going to go in and do part 2 during the mastermind, and I'm going to go in deep and talk about the specifics of a lot of this stuff and how we approach it, okay? But this is your open road, okay? We do not want traffic jam candles in our open road. Now, if we're already in the trade and the traffic jam candle forms, then it is what it is. Talking about if it forms a traffic jam inside the street. But you don't want a traffic jam candle forming in your open road. Your open road is the distance between your entry and your profit target. Okay, I'm going to say that again. Your open road is the distance between your entry and your first profit target. It's also the distance between your entry and your break-even point. Give me a 1 if you follow that. Okay. Open road. This is the open road. Okay. Right here. Distance between your entry and your target. All right. Got to make sure we are following that, because that's very, very important. When you guys call out levels and I say, no, I don't like it because something's sitting straight in our open road and it's no good, you should now know what I'm talking about. So for those of you that are not subscribed, you definitely want to tune in, because we're building a nice trading house here, right? We're building something beautiful here where you guys are going to be able to know the lingo and be able to take advantage based on that lingo, okay? Very, very, very important. To join the chat is free. You can join the chat by hopping in here, okay? That's the official Pip Talk chat. I go in very, very detailed in the iTrade alert chat, though. I don't go in as deep in the free chat, but you do have Pip Guide in the free chat. Now, Pip Guide will give you basic questions. He'll also help you with the subscribe link. But there's another Pip Guide. There's a more advanced Pip Guide. We have Pip Guide inside the iTrade alert chat. And that version of Pip Guide is very, very powerful. For those of you that are subscribed, go ahead and tell some of my users that are not subscribed some of the things that Pip Guide can do outside of answering just about any question you have about the market. Pip Guide is very, very powerful because he does all the heavy lifting for you, for crypto, for your future CFDs, as well as your Forex. Okay? He gives you a lot, tells you what's moving in the market and what you should focus on the most. Okay? He updates you on news alerts. You're right about that, right? Resistance and support levels, pivot levels, Fibonacci levels, and most importantly, bias. So the one thing that we do with Pip Guide is we start out and say, hey, Pip Guide, what's shaking and moving? Pip Guide will then tell you what's moving the most in either futures market, in either Forex or crypto. From there, you can then look and see what the bias is on these things. Hey, Pip Guide, what's the bias on RCN? Let's say RCN happens to be one of the most, movers, one of the prominent movers for the day or right now. You can then ask Pip Guide, hey, Pip Guide, what's moving right now, right? And then he'll tell you what's moving. Let's say RCN, it happens to be what's moving, right? From there, we go in and we say, hey, Pip Guide, what's the bias on RCN, right? He'll then tell you what the bias is. You then go to RCN, but before you do, you say, Pip Guide, how much should I risk per trade. And Pip God will tell you what you should risk per trade based on being a day trader or a swing trader. From there, you go to the chart and you can look at also, wait, let me back up. You go back to Pip God and say, hold on, Pip God, I forgot. What are the pivot levels on the hourly time frame for RCN? He'll then give you the pivot levels for the hourly. You can then ask Pip God, what are the significant Fibonacci levels for the hourly on RCN? Pip God will then give you those significant levels, okay? What's the success rate on my signals? Go ahead and tell them what the success rate on the signals is for those that are subscribed, right? We win so often, we barely worry about our losses, right? It's profits galore, okay? And we typically do 100 pips per trade, okay? 100 pips per trade on average, okay? You can pick the trade because you have a pick of the litter, okay? Not everybody takes every trade, okay? Not everybody takes every trade, but we barely talk about losses because they rarely happen. My batting average is very, very high. Why? Because I've been doing this for a long time. And for those of you that have been trading with me, it shows. And I've developed a curriculum that you guys can now follow along with that takes the things that we use in the markets that are traditional, but not maybe easy to grasp and understand for the novice trader or new trader coming in. And I've related it to something that everybody knows, which are the rules of the road and street signs. Right? 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 And most of the losers, even if we do lose, we only lose roughly about 1 to 2% per our account. I had Favor, who's one of my favorite students, right? Favor, she had a student that came in and they were talking about one of our losses. We had like a loss this week. It just happens. But student wasn't complaining. He was just saying he had gotten stopped out. She's like, hey, it's no big deal. I only lost $7, right? So it's a small amount what we lose on these trades when we lose because we have solid risk management, right? Right? Most of the things that we get from these traders that lose are for them taking their own trades or taking trades from other signals and mixing signals with my signals or not following the rules. I'll also say that the biggest reason that some of these winning trades turn into losers for you, are you guys ready for this? Listen real closely. Do you guys want a hidden gem that would tell you why most of you end up having some winning signals or even break-even signals turn into losers? You're too slow to move your stop loss to break even, okay? Or you just get in the trade late. So therefore, you can't move your stop loss to break even at the right time if you're following the rules, right? A lot of traders that don't move their stop loss to break even and are still in trades are pretty much in a position where now the trade can go left on them. So you've got to follow the rules to a T. So going back to my announcement, because I know a lot of you guys are in these intersection levels, okay? I'm going to start calling out trade by trade, step by step, trade bias analysis, or at least a trade analysis post-alert and post-entry, okay? All right? Yeah, over leverage on pullbacks is another big one. Now, let's get into some straight-up pip talk. All right, we all good? Or do you guys want me to go over these signs again? Are we good, or do you want me to go over the signs one more time? Because I can go straight to the charts, and we can get to off the charts, right? Or we can head back to these signs to make sure that everybody gets it. What do you say? You tell me. Charts. All right, let's do it. Let me pull up my charts here. Well, a couple of them say one more time. Let's see what the majority is. One says charts. Two say one more time. Give me more. Give me more feedback. Right? Douglas says good stuff. I appreciate that, Doug. Makisha wasn't here, so one more time would be nice. So she said one more time. U-turn says one more time. Ito says one more time. All right, Big Gucci, I'm gonna go over it one more time, and then we'll get to the charts. Yeah, no worries. All right. So, iTrade alert. Now, again, for those that are in the official Pip Talk chat, the public one, just know that it's nothing like the iTrade alert chat. Okay. Please give your feedback for those that are inside the iTrade alert chat and how you feel about that chat versus some of the other chats that you guys have experienced. I think that we've done a very, very good job on progressing you guys along, because some of you guys came and were beating your head against the wall in terms of the results that you were having, right? In terms of the results that you were having and the things that you guys were using. And a lot of you had no clue what you were doing. You were just following signals. But inside this chat, I think a lot of you have moved to being advanced based on compared to where you were, okay? Way, way, way better, right? And everyone's very helpful. Exactly, right? He hit for 1,000 pips in 1 week. Yeah, definitely did. That was me. Easy. We actually done that a couple of times. I know Big Gucci stepped away for a little bit, so we had a pretty good week. I think it was like last week, if I'm not mistaken. It was really, really good with our levels. So disclaimer, again, going through the disclaimer, you guys have already seen that. For those that have not seen the disclaimer, you're responsible for your own trades, all right? You take these trades, it's on you. With our intersection levels, I do not give stop loss and target unless you are in the iTrade alert chat and you ask. If you have that trade and you're thinking about taking it, all you got to do is ask. And if it's not me, some of your peers will help you. All right. So, boulevard analysis and boulevards. This is how we identify our boulevards. Your boulevards are just your higher time frame streets. They are North Boulevard and South Boulevard. You are identifying the avenue above current price that qualifies, and you're identifying the block below current price that qualifies. Once we go through our qualification process, right, and have mapped it, we can then identify where north side and south side is, okay, on the map. We got that? Everybody got that? That's north side, that's south side. Give me a 1 if you follow me. So in price action, when we say, hey, it's sitting up on north side or it's sitting on south side, you know exactly what we're talking about, okay? Ito, I'll give you advice on lot size once you are a part of my special club, because outside of that, I could be liable. Now, you can go in and learn in my mastermind sessions or ask Pip Guy. Pip Guy will tell you direct answers to that, all right? But inside this session, while we are recording, this thing will be shown over and over and over to people. So I don't want to, put us or the house that we're building in jeopardy by giving, true, risk management or financial advice as to what you should be doing with your money. But I will say this. Day traders typically risk 1% per trade because they take more trades than swing traders. Swing traders typically risk 2% per trade because they take less trades than day traders. And they're in their trades for a longer time horizon. And when I say 1 and 2%, that's of your total account. All right, now moving on. So I identify north side, I identify south side. Okay? No worries, Phil, we're in. Okay? Phil, we're starting over, baby. Look, Phil. You coming right at the beginning. Don't worry, baby. Don't worry. Yeah, you good. All right? So, boulevards are just our higher time frame streets. And all we're doing is trying to look for North Boulevard and South Boulevard to identify where we are on the map. Now, what's the map? The map is the areas between North Boulevard and South Boulevard. And this includes North Boulevard, and it also includes South Boulevard. From there, using Fibonacci tool, we can determine whether we're high on the map, low on the map, or in the middle of the map. Give me a 7 if you follow me. Give me a 7 if you follow that. Okay? Oh, it's going to be real special, because imagine with what you know and what you've learned, we got a virtual trading floor in the iTrade Alert chat room. So all of you are helping each other with extra eyes. And when you say, hey, RCN is high on the map, Pip God says it's moving the most, and the bias is in line with ours, and we know one of those pivots line up and a Fibonacci lines up, well, you can go in and bam, pull that trigger. And you also know whether to take it as an intersection level or as a U-turn. Now drop fire or flame if you're feeling that game. if you feel that's powerful and you know that's going to really definitely help you, not only in your trading, but just staying in the loop and being on top of these things, because there are 28 currency pairs. And then there's also a bunch of CFDs we're trading as well as cryptos. So I'm trying to create something where we're speaking our own language. I promised you it was Pip Talk. So we had to create our own street language, right? So the only thing we're doing here with our boulevards that create the map is we're going to our higher time frame, okay? Our higher time frame to be able to see where we are on this big picture. If I'm a swing trader who's a long-term swing trader, my higher time frame is done on the weekly. If I'm a short-term swing trader, my higher time frame is done on the daily. If I happen to be a day trader, I might be looking at my 4-hour or my hourly where I'm drawing my map, where I'm locating my boulevards, okay? Give me a 1 if you follow me. Nice, nice. Give me more ones, more ones. Yeah. 2 if you don't. A 2 if you're lost. I'm not afraid. For those that are lost, I'll definitely go over it again if you're lost. But a 1 if not, I get it. And I know some of you are driving. All right. Some of you are at work and you can't type. Some of you are at school and you can't type. I get that. All right. I'm moving on. Okay. Tia, let's back up one more time. So boulevards are weekly time frame or daily time frame. I'm looking at current price here and I'm moving on up to identify, my north side and my south side, right? When I look at that chart, I want to see where I am relative to my pivots and my avenue and my block, okay? Now, once I do that, I'm able to find out where my map is because the map is in between north side and south side, right? North Avenue and South Block. Got that? You might want to write that down. North Avenue and South Block, right? Or North Boulevard and South Boulevard, right? Right? This really, really should put you in perspective, okay? Lower I am down here, I'm all over my blocks. Higher I am up here, I'm all over my avenues, okay? Now, street. The street. All the street is, it's surrounded around these impulse signals, these street signs, these alerts that I'm giving out, these trades that I'm giving out, these levels that I'm giving out, okay? Some of them are intersection levels that I give out. Some of them are U-turn zones. The difference between the two is your entry type. So write this note down. Intersection is limit order. U-turn is stop market order. If I'm sitting inside a block and I give it out as an intersection level, you got to find your own stop and your own target, but you are going to take it as a buy limit. If I send out through the SMS text a U-turn zone, okay, you're going to take it as a buy stop if it's a block. If it's an avenue, you take it as a sell stop. And I give you those step-by-step instructions, okay? Give me a 7 if you follow me. So the street, all the street is, okay, is these different levels, the different trades that we're giving out. Now, here is our entry curve inside a block, our exit curve inside the block, okay, or on a block. When we're talking about blocks, your entry curve will always be above your exit curve, and the traffic jam candles are inside. When we're talking about a avenue, your exit curve is above your entry curve. And your exit curve will always be above your entry curve. Your entry curve is green, exit curve is red in the scenario, okay? Traffic jam candles are in the middle of the street, and we like the traffic jam candles to form when they come back in the middle of the street. Now, I've came out with a new signals channel, and the signals channel will be exclusively for these signs. And I want you to think of me as one of those traffic, those the traffic guys, right? Who were those people? Man, I forget what the person was when you were in school. right? But traffic monitor, that's what they were. Like a hallway monitor, traffic monitor. I'm directing the flow of traffic. Now inside the chat, right? Crossing, yeah. That's exactly what that is. There you go. So directing traffic, okay? You guys inside that channel will see that it's only signals. I'm only dropping my intersection levels and my U-turn zones. Now, I can't send out 50 levels inside SMS text. It already costs enough as it is. So if I'm sending out 50 levels and then sending it out to you when it activates, giving you text by text on all of them, we're going to kind of get lost. So understand that intersection levels are a little more advanced, okay? That's why I call them tier 2, because you kind of have to move on up. You started tier 1, you move to tier 2 because they're a little more advanced. You guys have to know how to place your stop. You got to know how to place your target. U-turn zone, step by step. I give you entry, I give you stop loss, I give you target upon entry or upon activation, upon being able to get in that trade now. But the beautiful thing about the intersection level is you have time to take the trade. You also have time to come ask Mr. Wall Street. And you also have time to learn more from that trade over time. The intersection levels are golden for your advancement and growth as a trader versus the U-turn zones because they're almost too fast to learn from. They're good to make money at the same time, but a lot of times they're very, very fast. Okay? Now, the boot camp's done. Got Pip got out, created the signals channel, also released these new different street signs and zones. And we're going to be releasing the back-end software this week. And it's going to have a signals board where you'll be able to see exactly where we are as far as the statistics on the trades, whether they're U-turns or intersection levels. You will also be able to get the entry points for U-turn zones, and you'll be able to know if they're open trades, pending trades, or closed trades, okay? Now, that being said, intersection level, you're prepared before it comes out. For those that are subscribed, your intersection levels are those green levels that are sent out in the snapshot picture. And you're given many of them. It's your job to set alerts on these levels. And then take a look at the sentiment in the group. You'll notice if everyone's getting in. If they're not, I'm telling them to back off a bit. You also, as you turn and tune into the mastermind sessions, you'll be able to learn a lot faster on what to do on your own with these levels as price goes in and triggers the alert. You follow me? Give me a 1 if you follow me. Okay? So you definitely want to make sure you tune in. But this particular call, I'm going to be dropping this call inside the Alert Traders chat and a lot of the other chats so that people can be able to catch on to what these street signs mean. All right? So let's move on. The intersection level, you're expecting price to come in and kiss the line and leave. And when you're there and well prepared, you're rewarded, okay? For those that are expecting to wait for the U-turn, we don't get the U-turn in certain scenarios. But keep in mind, these trades don't also always often happen without the liquidity and volatility that we need during big news events or during long stretches of news like we've had earlier in this week. So there are times when you want to shift to the U-turn zone where you're waiting and being patient and then entering after the turn. Because there are times when the spread here can stop you out. Give me a second, so I'll give you another link. Sometimes the link has issues. I'll have to go in and check up the link and see what's going on with it. Hold on there. Yeah, we have a couple of different links that we use, different funnels. Try this one. If the other one's not working, I'll have to check out that funnel and see what's going on with it. But you know, that gateway must be something. But no worries. So U-turn zones are a little bit better, but we use them based on the sentiment of the overall market or the sentiment of the trade and how price is coming in at that street, at that level. there are a lot of times when this is better for you. Last week was intersection level week. This week is U-turn zone week. And it doesn't mean that we're spitting out a bunch of U-turn zone trades. It means that you want to take a step back and maybe not take it as an intersection level, but probably approach it as a U-turn zone after the alert triggers. Give me a 7 if you follow me. And I'm going to say it again. Each week determines sentiment, and you gauge sentiment coming into the week. Each trade, you can gauge the trade by how it comes and approaches the street. So you can determine whether you back off from treating it as an intersection level with the limit entry order, and then maybe use a buy stop order for a block and treat it as a U-turn zone, or a sell stop market order for an avenue and treat it as a U-turn zone. Okay? Now, a lot of you are probably still confused about sentiment, because I don't get a lot of 7s when I say sentiment. All the sentiment is the mood and feel of the market. If there's a lot of news, you know the sentiment's going to be risk off, and there's going to be low liquidity because everybody's playing it safe and they're flat on the sidelines. When it's risk on, we have a lot of movement and healthy volatility. So you have liquidity that allows the market to flow healthy. That's the sentiment for, we're talking the week and the news. Now, you could have sentiment for a specific trade depending on talking about how it comes into the level. If I got one big candle coming in the level, that sentiment is different than it approaching with 3 candles. Okay? That's what I mean about sentiment and approaching it different, backing off, right? And going slow versus go, right? That's that red light, yellow light, green light. Okay? So when we're using the U-turn zone, we're treating it as a U-turn zone. If price action happened to come here and stop us out for intersection, those that did the U-turn zone have the luxury of waiting for the turn and then maybe adjusting their stop based on what they saw price action do at that moment. Okay? And then they enter there. Price then turns in our favor. Now, traffic jams. Traffic jams is the same as support and resistance. Okay? When we say traffic jam, we don't want a traffic jam in the open road, and we don't want a traffic jam to form in the street before the explosion leaves. So when we look at these different things, we're focusing in and saying, okay, these, I'll show you exactly how we use them a little further in detail in the mastermind session, but these are going to be used to kind of help me gauge my targets a bit. But I don't want them in my open road. Okay? So you can see here what determines a traffic jam candle. They're dojis or narrow range candles. Okay? You also have these as your common traffic jam candles here. So these are the ones that we're seeing in the street. Okay? Either before the level's created or after we come back to the street. And I'll talk about it deeper on Mastermind. I know some of you may not be clicking, but this is an open session. It's not for that. And last but not least, open road. Open road is that area between your entry and your target. And you want to make sure that the open road is clear. You don't form a traffic jam inside that open road. Give me a 1 if you follow me on this. Okay? You want to make sure that it's open, because if you don't have an open road, it's going to be hard to make it to your destination, which is that target. Target 1, target 2, etc. Okay? Open road. I'll say it again. Open road is distance between my entry and my targets. It's also break even. If I've got support or resistance that forms inside that open road, which is my traffic jam, it's no good. It erodes my profit margin. That means I don't have clear room to get to my target without a problem and price possibly turning. Okay? I'm giving some gems. I really am. I really hope you guys understand it here, because we're going in. I'm going to go in even deeper tonight. So those that are not subscribed, you better subscribe. Okay? For those that want to know what this is official Pip Talk. It's off the charts, baby. We go basic, intermediate, and advanced. That means for those that are inside IML, great. You've learned the basics. You've also learned how to follow and take signals, which means you've learned how to take orders. But do you want to be an order taker? Nah. You want to learn how to fish yourself, right? Well, you're in the right place. because we go deep here, baby. We go in on each of these trades and how you can find them yourself. And then it's not just finding the trade, but it's also trade management. What to do after you found the trade and how to manage that trade effectively. And trust, we go over every technique known to man in this market so you can be effective and alert as a trader. And me, you know me. I'm good old Mr. Wall Street, 17 years of experience. But one thing I love is I love like-minded people who love money, who love to talk that good old pip talk. I give it to you every day. This session's free. So forgive me for those that are in this session that are my mastermind students who may not be catching on or who wanted a little bit more. You definitely want to tune in, okay? You definitely want to tune in later on for the more advanced part 2, all right, of this, okay? You're using harmonic scanners, but you're using harmonic scanners on time frames, ETO, that aren't tradable in Forex. You're given signals on a harmonic scanner that gives trades on a time frame that causes a lot of slippage, and it gives the brokers a very, very big advantage as market makers because they can widen the spread on you. So it can be very dangerous trading on those time frames. You're also using a harmonic scanner that, in my opinion, the signals are given out a little late in terms of the patterns. A harmonic scanner, if it's going to be effective, it should give you these patterns beforehand so that you can be able to prep yourself and take the trade, much like my intersection levels, okay? But with that being said, you know who it is. It's me, Mr. Wall Street, give you that good old pip talk, the talk you love. Tune in until next time. That next time being 7 o'clock Pacific Standard Time tonight. All right, well, I give you a piece of my mind, a master's mind. With that being said, peace.